Welcome to Lesson 6, Part B. Here we are going to switch our focus from a single trading system to a combination of systems. Before though, let's have a look at the real-life system performance according to the performance metrics discussed in the previous video. Let's refer to the short strategy on gold. The system profitability is fairly good. The profit factor, in fact, stands at 1.76. Besides, we have a terminal wealth relative of 1.24, meaning that at the end of this 12-year period, our capital records a 24% growth. Remark, though, that the average position size held by this system is 0.5. It is then assessed accounting for half position size trades. We will reckon up then a 48% growth if we utilize this system at its full potential, opening full size positions. That might not look an irresistible system to the novice analyst, because 48% over a 12-year period just means a 4% annual return after all. This 4% annual return, though, is achieved staying on the market just a short time, leaving room for further utilization of the available funds, making them possible to operate more systems like that on the same account. With 5 systems more, we would get a terminal wealth relative of nearly 3, meaning that we would get a final equity as big as 3 times the initial equity. We could also wind up having more systems running together as a combination. The extent to which it's possible to add up systems depends on some factors which are going to be discussed in Lesson 7. Let's see how risky this system is according to the basic metrics introduced in the previous video. We have a maximum drawdown here of 7%. The maximum drawdown period is 2 years and a half, meaning that it took 2 years and a half to recover losses. That is fairly satisfactory. Apart from these 2 years and a half, the equity curve grows for the remaining 9.5 years. Let's have a look now at the equity allocation over time. Look at the green bar. The system stays on the market just 25% of time. The 75% of time, funds are completely free for being allocated on other systems. Besides, as far as derivatives are involved, even on those days where the system is on the market, funds are just utilized at the 5% level, or even less. because it is just the gold contract margin that has to be funded. Well, if we normalize the annual return accounting for the time allocation, we find out that a 2% annual return, staying just the 25% of time on the market, is appreciable as an 8% annual return achieved staying on the market all the time. That is slightly above 7.5%, which is the annual return of the US stock index, the most profitable stock index in history. Reviewing all that, even the novice analysts who despise a 2% annual return will start looking at this system from another perspective. Let's have a look now at the whole system combination, which is denoted with the prefix XX according to the MASASP notation. We stack here the underwater curves of the four systems involved. We see that these systems all have a drawdown of 5%, from 5% to 7%, for the sake of precision, except the last system, the long strategy on the US stock index, whose drawdown stands at 14%. If we sum up these drawdowns, we get 37% as a result. But this sum is meaningless because the actual drawdown recorded by the system combination is just 15%. That is much less than the sum of the drawdowns of the involved systems. On the other hand, the total return of the system combination is as big as the sum of the returns of the involved systems. That is a sound example of the benefits of a diversification. Well, combining systems pays off much more than optimizing each single system. We will cover diversification in details in Lesson 7. The last thing to remark regarding this stacked chart involving all the systems is that the last system, the bottom one, is the worst in terms of drawdown. In this ranking of the systems, it ranks last. If we go back to Lesson 4, though, it ranked first. It ranked first in terms of robustness to sample biases. Lowest sensitivity implies highest robustness. That clearly shows that it is not that easy to rank the trading systems. The best thing to do is to combine them, provided that they are fit for being combined. That is going to be the topic for the next lesson. Thanks for watching and see you at lesson 7.